Let's take a look at all things money matters now. The local bourse is weaker so far today, along with its global peers, as investors deal with a triple whammy of issues, including the return of China's clampdowns to the fore. The JSE All Share Index closed over 2.4% down on Monday, as the two biggest companies on the bourse, Naspers and Prosus, plunged over 13% and 11% respectively. To help us dissect some of the latest business news, we're now joined by Karl Gevers, portfolio manager and co-founder at Benguela Global Fund Managers. Karl, thank you very much for joining us this afternoon. How are we faring following the bruising close yesterday, the worst of the year on the JSE?
Yeah, good afternoon. Much, more of the same, continuing on yesterday's route with All Share currently down 3%. Again, the main driver of that is Naspers and Prosus, down 10 and 11% respectively on the back of Tencent that's under pressure in China, with just Tencent itself having pressures on the regulatory front, but the Chinese tech sector, in general, coming under huge pressure. And additionally, we've got the resource sector that's coming back quite strongly, down 3% today, on the back of weaker commodity prices. There's a combination of COVID COVID picking up in China, so a bit of uncertainty around that, and then just overall, the rally in commodity prices on the back of the Ukraine Russia war is sort of fading slightly, and that has put pressure on that sector.
The rand relatively flat today. What's driving sentiment or the move there?
Yeah, so the rand has been quite solid in the last month or so. Currently trading just above 15 rand to the dollar, at 15 at the moment, and supported by the stronger commodity prices that I talked about earlier, and also net inflows into our market in terms of the equity market, so getting some international support there. But I think what's on investors' minds at the moment is the Fed meeting tomorrow, where there is an expectation of a 25 basis point hike, and that certainly will put the rand on the back foot, given that investors will get a better return in US dollar in the US.
Let's take a look at company results. Advtech Limited publishing their trading statement for the year ending 31 December 2021. Talk us through those numbers.
Yeah, I think quite a good recovery. Advtech would have been severely affected by COVID in the last 2 years. The share price reacting quite positively on one of the few shares that is up today, up 3%, with the company expecting headline earnings per share to rise 30 to 35%, and that'll leave it at earnings of about R1.19, between R1.19 and R1.24 per share. So a significant improvement, they say, across all three of their businesses. There's enrollment growth, in terms of their schools, good cost control, and improved collections, which is important given that a lot of parents have struggled to pay fees. So I think that those are all positive signs.
News from Home Choice reporting a 24% profit growth. Talk us through that development.
Yeah, so Home Choice, which is a retail and financial services provider, headline earnings looking to be R2.03, and then that's on the back of revenue growth of 4.8%. But I think the main driver there is on the financial services business, where if one looks at the loan disbursements, have grown by 74%. So a big focus on their fintech side of the business, and also acquisition of Pay just now, making a bit of a difference there. Also a dividend of 20 cents coming through. So I think a reasonable result in the current environment.
Karl, let's take out the crystal ball and take a look at this piece of news. Netbank being ordered to leave Sekunjalo's accounts untouched amid an ongoing court case, rather. So let's take a look at both scenarios. Should Sekunjalo win, and should the bank win, what happens, and vice versa?
Yeah, so the current order by the court to leave the accounts open or untouched is, while they're waiting for that interdict application against Netbank from Sekunjalo to be heard on the 8th of April, And the claim by Sekunjalo is that there is collusive behavior between the banks to close Sekunjalo's accounts. The banks in general are claiming that the closure of accounts is based on reputational and commercial risk that they're facing. So I think in terms of that argument, if the interdict is in favor of Sekunjalo, it would probably put all the banks under a bit of pressure to potentially open the accounts. The banks claim that they are entitled to terminate a contractual relationship on reasonable notice, which is what they've done. Whereas I think Sekunjalo is looking at it more from a constitutional point of view. So I think it'll be an interesting argument there. Just certainly we'll see how that pans out.
Absolutely. We definitely want to watch. Karl Gevers, thank you very much for joining us. Portfolio manager and co-founder at Benguela Global Fund Managers.